If you're like me, you're always on the lookout for the next big investment opportunity, but with so many options out there, it can be overwhelming and difficult to know where to start. That's why I want to share my personal experience with you. 2 to 3 years ago, I was in the same boat, looking for a smart investment that could yield a significant return. And that's when I discovered ETFs. ETFs, or exchange-traded funds, are a type of investment fund that trades on stock exchanges, much like a stock. They're a great way to diversify your portfolio and invest in multiple stocks with just one purchase. But not all ETFs are created equal. It took some research and trial and error, but I eventually found the ETFs that helped me 10 times my investment, and I want to share those ETFs with you. But before I do, let's talk about why ETFs are such a smart investment choice in the first place, especially how I got the secret of big returns from ETFs. One of the biggest advantages of ETFs is their diversification. Because ETFs are made up of a collection of stocks, they're less risky than investing in just one company. If one company in the ETFs performs poorly, it's balanced out by the other companies in the ETFs that are doing well. Additionally, ETFs are typically less expensive than mutual funds, which can eat away at your profits with high fees. And because ETFs trade like a stock, you have the flexibility to buy and sell them throughout the day, whereas mutual funds are only priced and traded at the end of the trading day. So now that we know why ETFs are a smart investment choice, let's dive into the ones that helped me 10 times my investment. The first ETFs that I recommend is the ARK Innovation ETFs, ARKK. This ETFs focuses on companies that are disrupting traditional industries with innovative technology, like Tesla and Square. It's performed exceptionally well in recent years and has a strong track record of growth. So let's consider this, the $1 billion ARK Next Generation Internet ETFs. Another popular ARK fund has one of the top performing funds this year, but with a more focused approach. This includes digital and internet companies such as mobile payments company Block Incorporated, SQ, streaming media icon Roku Incorporated, ROKU, and other fast-growing firms. These are key players in emerging technologies, and despite recent volatility, investors appear to be warming to these companies' long-term prospects. So far this year, the stock is up about 30%. So the next ETF on my list that I recommend is the iShares Global Clean Energy ETF, ICLN. This ETF invests in companies that are leading the charge towards renewable energy, like First Solar and Vestas Wind Systems. With climate change becoming an increasingly pressing issue, this ETF is not only a smart investment, but a socially responsible one as well. Number 5. Another ETF that has performed well for me is the VanEck Vectors Semiconductor ETF, STEMF. This ETF invests in companies that design and manufacture semiconductors, which are crucial components in a variety of electronic devices. With the growing demand for technology and the Internet of Things, this ETF has a lot of growth potential. If investing in cryptocurrency isn't for you, consider the Vanguard Short-Term Corporate Bond ETF. This is a diversified bond ETF with a portfolio of nearly 2,400 bonds that has an average duration of only 2.7 years. Number 4. The Fidelity Zero Large Cap Index FILX. The Fidelity Zero Large Cap Index Mutual Fund, which bears the Zero prefix, is an investment firm's entry into mutual funds with no expense ratio. The fund technically tracks the Fidelity US Large Cap Index rather than the S&P 500, but the distinction is purely academic. The real distinction is that Fidelity, which values investors, doesn't have to pay a licensing fee to use the S&P name, keeping investor costs down. The expense ratio was 0%. This means that the annual cost of $10,000 in investments is $0. Suitable for whom? Excellent for investors seeking a low-cost, widely diversified index fund to use as a core holding in their portfolio. Number 3. The VanEck Semiconductor ETF, STEMF. The stabilization of the chip-making industry after a few rocky years is another high-tech trend to keep an eye on. With gains of more than 19% this year due to strong performance from businesses like NVIDIA Corp, NVDA, and Taiwan Semiconductor Manufacturing Co-Led, the $7 billion VanEck Semiconductor ETF reflects the health of the sector, TSM. Recently, the operations were disrupted by supply chain issues during the pandemic, and some companies overcorrected, leading to an oversupply of chips and weak pricing power. Then trade disputes further complicated matters. However, based on recent months, it seems that things have stabilized for many chip makers, and SEMI provides a way to capitalize on this development. Number 2. Global X MSCI Greasy TFGREK. With more than 22% gains year-to-date, the Global X MSCI Greasy TF is the best-performing country-specific fund this year when compared to sectors. With assets of about $200 million, it is modest but well established. Its top holdings are all Greek companies, including the regional bank Eurobank Ergasias Services Holdings S.A. (EGFEY) and the conglomerate Mytilenios S.A. (MYTHY). Although you might not be familiar with some of these stocks or closely follow Greece's economy, things are looking up for this region with a growth rate of almost 6% in 2022. Number 1. As the name depicts, Wisdom Tree Europe Hedge Equity Fund (HEDJ). The Wisdom Tree Europe Hedge Equity Fund is a little less unique but still a good tactical opportunity. By hedging exposure to exchange rate fluctuations between the US dollar and the euro, this ETF offers exposure to the European equity market. As a result, you are exposed to well-known European businesses like LVMH Moet Hennessy Louis Vuitton Southeast, Sanofi SA, and Stellantis NV STLA, a manufacturer of automobiles, pharmaceuticals, and luxury goods. With this fund, you can look forward to a brighter future for Europe after a difficult 2022 without having to worry about exchange rates wiping out any hard-earned gains. This year, the $1 billion fund has increased by more than 16%. Something extra for you today. Why don't you try this investment? The Invesco QQQ ETF QQQ is another strong choice. This ETF tracks the NASDAQ 100 index, which is made up of the 100 largest non-financial companies listed on the NASDAQ. This includes big names like Apple, Amazon, and Google. Of course, it's important to remember that no investment is completely risk-free. ETFs are still subject to market fluctuations and the performance of the companies they invest in. It's crucial to do your own research and make informed investment decisions. But with that being said, these ETFs have a strong track record of growth and have helped me significantly increase my investment portfolio. I hope they can do the same for you. You can now choose the cheapest ETF to buy now and gain whilst you wait for the boots in the future. Before you go off, hit the like button, subscribe as well, and comment on the videos.